Hey everybody, DayTraderRockStar here with a market radar for you going into the week of April 10th. It is Friday, it is 2017 in case you're listening to this video in the future. But it's relevant for next week, and I intend to kick off the week with a market radar talking about what I see technically speaking on the market and how things are shaping up. I think today is important to announce that not really announce, but just to kind of discuss the current events that are happening over in the Middle East. I mean, and I was, I think a lot of people were taken by surprise by the cruise missile attack a launch against Syria. I don't think it was an attack. It was in response to the chemical attacks that they've been doing over there. So we launched, 59 cruise missiles, or 16, 59 hit. Anyway, the market overnight did react to that, and I just want to show you that to start things off here. The market, if you were watching the markets last night, as some of the people here at Day Trading Radio were, actually Paul was on the air. I'm going to zoom out here, and you can see right about here is where that announcement came in, and I remember looking at my phone and seeing a news break, something Syria cruise missiles, and I was so out of it. I was under the effect of just having a bad reaction to a tetanus shot. I had a fever and stuff, and I didn't even realize what I read. I looked at it, glanced at it fast, and didn't take it in. Anyway, this morning I find out, and we look back here and we could see that the market reacted to the downside on that. And then we went all the way back up to the scene of the crime and through that level. Now, the other big event, and again, you can see this is the opening of the morning, we had the jobs report. Now, the jobs report, it just makes you laugh. You remember, I was listening to some interviews today about the last presidency and how polls were just no one could believe a poll. I mean, all the polls said that Hillary's going to win. It's impossible. I've actually heard people on the news say it's mathematically impossible for Donald Trump to win, and everyone was wrong. Other than of course the people who called him, but the majority of the people didn't see this happening. Well, I don't know if that's a comparison to this. But every month we have our jobs report, and that measures job growth from the previous month, and we have estimates, and we have the ADP come out on Wednesday, and they're supposed to be giving us that's supposed to be in line with the jobs report. It's supposed to be a precursor to what's going to happen. So we had an outstanding number on Wednesday. It was a blowout. It was the biggest number in. I don't know how many years, but it was a tremendous blowout on the ADP report. We come into this morning, and again, quote, economists, all these economists who went to school and stuff, have been anticipating a gain of about 180,000 jobs, 180,000 jobs. We had 98,000 jobs. That's what the report came in, 98,000. A huge miss. How do you miss that much? I mean, it's all smoke and mirrors. Everyone's just making up numbers, because if you're doing it the right way, you would get it right. And I know it's more complicated than that, but what's the sense of even listening to analysts if every time we look at these things, they're so off? Unemployment rate was 4.5%, the lowest level in almost a decade, down from 4.7% in February. And the average hourly wage grew by 0.2%. So, that was just something to see. Then the market here kind of chopped around in the morning, formed this nice little pennant formation, and we eventually just broke out of the pennant formation and made our way to the highs, and we were actually in positive territory there. We got up to this trend line, which let's go out here a little, see if you can see what that represents. This is an old trend line. It looks like, wow, that's a real old one. But it's a good one. Look at this. We came up to it just about here, pulled back. We came up to it, chopped around it there. Then we came up to it again, and we hit it there. So an important trend line. We'll keep it here for next week for now. But then at the end of the day, we kind of moved down a little. And, that's just the intraday move. Basically, we ended flat. The S&P was down 2 points. The Dow was down 6 points. NASDAQ was down 1 point. I mean, that is flat as flat could be. without having goose eggs. And you know, in this market, it's just waiting on some things. We got Russian cruise, you know, cruiser heading towards our ships over in by Syria. So there's a little, you know, anxiety about that. We'll see what happens with that. If there's any escalation, is there going to be more cruise missile attacks? You know, this is all going to play a part. And then we have this Chinese summit that Trump is going to hold with the leader of China. And, you know, and I think people are just waiting for this all to clear up. And then in Art Cashin came out with a good quote today, or a quote. He talked about the light volume, tells us that the traders are overlooking or just not, you know, not even caring about the cruise missile attack. They're pretty much waiting on to see what's going to happen on the political side of things. So, and that's exactly what we're looking at going into next week. It's just one of those weeks where we're not going to say expect big fireworks. Market's on hold right now. It could go either direction. This is one of those situations where we don't have a red arrow up or a red arrow down. I think it's a caution. First caution I want to throw out there, probably all year, and probably and more than 6 months. I haven't really been that cautious on the markets right now, just because of you know, some of the situation that's developing overnight. We have a weekend here. Our setups, we did put out the watch list for next week for the members of Day Trader Radio. I think there's great setups on it. But remember, news trumps everything. And quote Trump. So this is where we are. Here's the daily. Daily here, flat line on the 14.3. And it's turning over on the 9.3, which is a faster rotation. We're really dragging here, you know, holding on to that trend line. If we look at the 60-minute time frame, you can see that we had a nice kind of 1-2-3 pattern, and then we chopped around here, chopping around and kind of holding on to it. We have an underlying trend line back here that we could come down to. It's kind of an X marks the spot. So it's just, you know, right at this point, the 60-minute, I'll give you the time frames and how they set up. 60 minutes kind of bullish right now. The daily, again, you know what? I'm not saying it's starting to turn over. I'd rather see you know, a little bit more volume coming in here. There was okay volume to the downside today, but it was a flat day. I shouldn't even say it was a down day. Another thing I want to address is there's a nice report out. Let me see if I bring it up here so I give proper credit to everything here. Where is it here? I got so many things on my screen. There's a great statistical report put out by LPL Research, Ryan Dietrich, and I follow him on Twitter. He's really good. He has a lot of stats, and I love stats. We're talking about the first quarter just ending and what a big first quarter means for the market going forward. So here's going back to 1951, it looks like, or at least all the way back there, all the times we had a nice positive first quarter. What happened the rest of the year, and what happened the next month. On this, you can see it's a nice return here. 75% of the time, April has been positive. Second quarter, what does that look like? 66, and then 87 and 85. I am pretty much looking pretty good. This is a 5.5% return first quarter 2017. Last first quarter in 2013 was 10%. Before that was 12%. So that was 2013, 2012, 2011. Those are pretty good numbers. So we're going to see how that performs going into next week. And you got to go by this. The statistics are good to look at, add clarity to the markets and stuff. But when it comes down to it, no one really could predict what this market's going to do. We have to take more of an inner view of things, and it's not our. I was just thinking to myself, trying to explain a better way of explaining it. It's just not our parents' market anymore. There's so many fail safes, and you know, just a lot of control, a lot of transparency in the market. That a lot of, you know, it's set up not to give these big crashes anymore. I mean, I think a lot of people get a little concerned about being in the market at the wrong time, and they're always trying to predict what this correction is going to be. But you can't predict that. It's just, you know, it's impossible. This market could go up another 5 years. It could go up another 1,000 points. Eventually, someone will call the top, but most people will not be able to call that top because the future hasn't been played out yet. You know, this could continue to rise, our GDP, our debt. It's all a bunch of numbers, but you feel good about this market right now. At least I do. I don't see it turning around. I guess that's what it comes down to, is taking everything for what it is. Let's take a look at a couple other notes here. Let's see what we can find. What's all this? Oh, you know what? I should have... shoot. All right, here are those stats here. April has been up 2% on average versus the average April gain of 1.5%. When you have a positive quarter of 5% or more in the first quarter. So we have a better thing. Second quarter has gained 3.2% on average versus a 1.7% gain. And again, the rest of the year here, it seems to be up 9.6% on average versus the average return of the final 3 quarters of 6.4% if those gains are not over 5% in the first quarter. This is all taken into consideration that our gains are over 5% in the first quarter. And last full year has been higher 23 out of 24 times, with only 2011 lower. And again, these are stats, but they sure do look good right now. And then give him, and here's a little quote from Ryan here saying, although you think a big first quarter could lead to some near-term weakness, it sure doesn't look like it. In fact, continued strength and a good deal of outperformance are perfectly normal after a big quarter, of course. All years are different, he goes on to say, considering many factors. But, he also believes that the bull market is still alive and well. And I agree 100% on this. I still think there's great opportunities here. So that's where we're looking. So if we look at that and we take everything that we we base our analysis on, even looking at the chart looks like a nice flag, just a nice pullback. Everything looks good. It looks like we're just waiting to get through some of this news, and then we're going to probably push out of this flag to the upside. Do we rotate back down here? This is also the weekly chart, but here, take a look at the daily. Do we rotate back down here one more time, or do we correct and move higher? I believe we move higher, but that's going to be a guess on my side. I would just say let's get through the news coming up next week, and let's get through the weekend and start the week off, and we should see this market here continue to drive higher. All right, so that's it. We got anything else to talk about? Just want to do a little market radar for you. Tradeometer has been good. Divergence have been working out really well. I haven't been on the air since Thursday. I was off Thursday, and then Friday I was here doing this watch list and doing this list right now. So again, chop, chop, chop. Nothing really here to jump at. Probably the best trades right now, the intraday trades, using both some of the divergence, the Rambot, and the Tradeometer, and just picking some spots. All right. We'll see you on Monday in the markets, as usual. Day Trading Radio.